Welcome to Boston Real Estate Times. Our guests today are Garry Holmes. He is the president and CEO of RW Holmes, and Mike Ogasapian. He is assistant vice president at RW Holmes. Based in Wayland, RW Holmes specializes in commercial brokerage services, mostly in suburbs, almost 80%. And then also they do about 20% of their work in urban locations. So we are going to talk to them about what is happening today in suburban markets, including office, investment sales, lab, manufacturing, and industrial. So again, welcome to both of you again to our show, Garry and Mike. Mike, so let's start with you right away about if you can give us a quick snapshot about investment and sales market in suburbs today.
Sure, and thank you, Upender, for having us featured on the Boston Real Estate Times.
Sure.
Yeah, to hop right into it, essentially to look at it from 2 points of view of the office investment sales market and the industrial investment sales market. So the office side, right now we have seen, obviously deal velocity has slowed down for the trades of major assets. A lot of the reason for that is obviously COVID.
Sure.
We've seen a slowdown in leasing to a degree, and as a result, that's forced some owners right now who have a good asset to hang on to it, and we're seeing less comps now for the trades of some of these assets. So there is obviously a reason driving that. Despite that, we do still see some activity on the office investment sales side. Just about all of that is fueled by any asset that has a strong rent roll and tendency to carry it through 2021. And so we have seen some of those trades happen. On the industrial side, velocity really has not slowed down. We still see many assets either being marketed for sale or out there trading. The reason for that is many of the institutional investors, even the non-institutional investors, are looking at these assets and saying, geez, if I'm looking at office, retail, probably not as strong on that right now. But if I'm looking at an industrial warehouse with high bay and docks, that's really interesting because you'll see either a new lease happen, or you'll have a very strong existing rent roll where rents across the board in suburban industrial assets have appreciated right around 15 to 20% within the last 5 years.
What about the office asset? If you can also talk about the pricing and the valuation of office assets as well as the non-office assets in the market.
Sure. Before COVID, we definitely saw not only assets that had strong rent rolls, but also add value properties were trading at a record high. Right now, the add value properties, the only add value trades you're going to see for an office building are going to be for life science conversion. Simply because that's the only way you'll ever backfill right now within reason. Anything on the income side, where you do have a strong rent roll, we've seen probably a plateau where we still see strong valuation, and we still see assets trading at high numbers, not quite record numbers as we saw pre-COVID. But still a strong market, again, predicated on the rent roll.
Okay. Mike, we'll come back to the life sciences part in suburbs a little bit later. But now I want to get back to Garry. And Garry, we know that, we have seen that Greater Boston suburban market is divided into various submarkets. You have South Shore, North Shore, Metro West, 128 Belt. If you can just give us some sort of a snapshot about the different markets and their strength and what is happening in those markets.
Certainly. I guess just to touch on a few of the strengths on some of the various submarkets, Natick Framingham market, The last decade has had, the lowest vacancy rates. And I think a lot of that is fueled by just so much diversity and the strength of the large corporate users that are in that marketplace, between MathWorks, TJX, Cognex, Staples, Bose, Sanofi, Genzyme. So tremendous growth sectors right there. And it always seems that one of those large corporate users has an appetite for additional space. When you go out to Central 128, that has been and continues to be ground zero in terms of the suburbs. That's where the vast majority of companies want to be. And right now, it already had a strong office market, but right now, which I know we'll be touching on more later, but what's happened with Cambridge, the growth of the whole lab sector, you're seeing a tremendous number of the buildings on Central 128 right now that are being converted to lab space. As a result, a lot of those companies that are essentially being forced out of those buildings that are being renovated, they have really been looking toward some of the value plays that you see in the North Shore or South Shore. So I think that the lab play is really benefiting quite a few of the various submarkets. If you go out to 495, clearly the office market has lagged for the last 5 years compared to the rental growth and the activity that you've seen in other submarkets. But on the flip side, the industrial market has just been on fire. So tremendous growth, all sorts of activity, spec development. So clearly, all of the submarkets have various strengths, and I think that's the benefit of being in Massachusetts. There's always some good things happening, whether the economy's chugging along or facing difficult times.
So now, if you can also talk a little bit in more detail about the South Shore market and the South Shore versus Metro West market. What are the big differences between these two?
I think the interesting thing really is, if we were having this discussion 4 months ago, our discussion would focus on public transportation. And you see an awful lot of companies that have taken advantage, whether they're in the Quincy area, taking advantage of that public transportation. So right now, that's been a huge differentiator between the markets. It's going to be interesting to see how that plays out over the next 12 months or so, and whether the South Shore in some of those various, communities loses that advantage.
Okay, thank you. Now I want to get back to Mike. Earlier we talked about the investment and sales market. If you can give us some examples of recent transaction,
Sure. Yeah, a couple have happened recently, and when I say recently,
I think you guys did one big transaction in Woburn, right?
Yes, yeah, we were fortunate. We were part of one building that we handled for lease for many years that performed strongly and had a full rent roll at the time that we went under agreement. We had one tenant go into default, but we'll be able to backfill that. Actually, it's got dock access. But anyways, yeah, that was a non-institutional family trust that was looking for a building with a strong rent roll and a good location. They liked Woburn. They were familiar with the area, and it made for a strong choice. But looking elsewhere, 60 Hickory in Waltham, another not so much institutional group that bought that, but a local group. Also, Sylvan Road, 4060 Sylvan Road, that was purchased, that had National Grid and Verizon as tenants. That was a major trade that occurred. And then also 405 Cochituate Road in Framingham. Another one, they had Fidelity was a major tenant there that's going to carry that building. So we are seeing those trades happen on the office side. And as I mentioned, on the industrial side, again, continues to be a very attractive asset for both the local non-institutional would also be the big guys, the REITs, the major players that now are starting to run towards those assets we saw around.
Who is driving the industrial market today? Like what type of tenants are driving that?
Mostly e-commerce. Those are the big box folks. So obviously, you've got major commitments from Amazon in Wilmington, Revere, Taunton. I think it was Westboro, that an Atlantic's project. So some major commitments from Amazon. But then also you do have the smaller tenants that maybe hit those more infill buildings, as we like to call them, that are between call it 60 to 90,000 square feet. That are able to that now need that space as well. That are also growing and need to find a home. And so there's strong demand on the leasing side. You could if you were an investor right now, you could pick up a building that maybe had some risk on the rent roll side, and maybe improve on that as opposed to office right now.
Sure. Now, Garry, I want to get back to you now and talk a little bit more in depth about leasing market, especially the office leasing. And I know you have said that the leasing market right now is in hibernation. So just give us some sort of a more insight into what is happening now, and how do you look at the leasing market in the next 2 or 3 years, or in the post-COVID era?
Well, I guess for starters, to be clear, hibernation is the correct word, but that would be specifically for the office market. We're seeing, as Mike just alluded to, tremendous demand on the industrial side, and the lab sector is extremely strong. But the office sector, right now, once people get back to work, then I think companies have the opportunity to sort of evaluate what their future space needs are. But it goes a lot further than that. What is the future office design as a result of COVID? So I think that there's just so many questions out there and so many unknowns that the office sector, you're just going to see a lot of requirements placed on hold. We're seeing a lot of our clients just trying to get some short-term extensions until they can sort of figure things out. We still feel comfortable that the office is not going away. There's still going to be demand going forward. Certainly there's going to be, at least 15% of the inventory out there that will need to be repurposed. But I think overall we're still bullish on the office market in general, but we don't expect activity to really be picking up to any noticeable extent until next year. When you sit there on the other side, as Mike alluded to on the industrial, it doesn't matter if you're, inland and you're talking about a Revere, if you're up on 495 North in the Wilmington area, if you're 495 South down in the Taunton area, industrial in all submarkets is really firing on all cylinders. And, it's interesting too, I think Massachusetts is starting to get notice from a lot of the institutional players. Up until recently, what we thought of around here as a quality industrial building is, something that had 22 to 24 foot clear. Now you're seeing some modern boxes come out of the ground, 32 foot clear or higher. Granted, we don't have the land like you have in the Midwest and other sections that, you're not seeing 1 million square foot buildings go up. But the product that's going up is really establishing Massachusetts as, a legitimate industrial market right now. And then, once you get into the life science sector, it's just growing rapidly. You're seeing, lab requirements pop up. And as I mentioned too before, that's pushing out to 128. But at this point, you're seeing the lab sector out on 495. You're seeing it all the way out into Worcester. So that's just a huge dynamic in our marketplace.
Yeah. So let us stay a little bit on the lab market and the life sciences market. Of course, many years ago, the Cambridge was the place to be for the lab and the life sciences, then slowly moved outward, and it came to, other immediate suburbs. Now, when you look at given the phenomenal demand of lab space, both dry and wet, and uh, even some manufacturing space for these pharmaceutical and life sciences companies, um, do you think there is enough demand to compensate for the loss in the office sector?
Um, I right now that's a trend that we're seeing, and the short answer to that question is yes. It what it really depends on with some of the conversion that you're seeing is the buyer or the owner needs to come in and assess whether or not they can actually achieve the infrastructure that's required. Plumbing, HVAC, you need clear height between your floor plates in order to be able to do that type of conversion. So it's some of the Class B product, particularly on the office side. We've already seen some of that begin to be reused or refurbished into lab space. And we think that that's a trend that will continue, especially in Central 128, where you really can't come out of the ground like you can along 495 and Route 2. If you want to go up to Devon's and build a new facility, they've got land. But if you want it to be in Waltham or Lexington, the reality is you won't find that land, and if you do, it won't come easy and cheap. So that's certainly a trend we'll see to continue.
Okay. Now, Gary, no matter how strong or how weak the market is, there is always some sort of a sublease space, in the market, or some tenants are looking for sublease cheaper options. Where is the sublease market stands today in the suburbs?
We've been pleasantly surprised that you've seen, a few spots that have been coming up in general. But when you look at downtown Boston and probably pushing 3 million square feet of sublease space, you're probably looking at, the largest block right now, probably being TripAdvisor and Needham that, could give up roughly 100,000 square feet. But we're pleasantly surprised. We have not seen a large volume of sublease space in the suburbs up to this point.
And your take, I know that, in few months or, few years, the COVID is going to go away. There is no doubt about it. And so what is your vision after that, after all these things going through that? And actually one study I wanted to mention you that, a lot of companies have come with numerous studies. And one study which seems very reliable, I don't remember the name of the company which did that, but they are saying that no matter what happens, 16% of the employees are going to work from home. No matter what happens, they are not going to come back. So you will have that 16% dip into the office demand space. And what is going to happen to that space?
I think it's really big that, I think we could sit here for the next few hours and argue what percentage is not going to come back to work. And I think there's going to be a higher percentage coming back to work than a lot of the studies show. But regardless, there's going to be excess space out there. It's going to need to be repurposed. As Mike mentioned, there are a lot that goes into being able to repurpose space for lab. A lot of that space is just not going to be feasible. So these communities really need to understand that. And you have to see who's going to get ahead of this game. And I really see it as going housing. Corporate housing on the rentals, refurbishing a lot of these Class B older office buildings. Right now, people that are working from home are going to require more room. They're going to require more amenities. A lot of the product in the suburbs right now, if you're doing an over 55 development, it has a lot of the bells and the whistles and the pools and the different amenities and theaters. But in the suburbs, how are you really going to be attracting, I think, the age sector that's under 30 with some quality product? And again, I think that's where some of these municipalities can get ahead of the game. Otherwise, also what they're going to see is a number of landlords coming in, filing for abatements.
Right, and to piggyback off of that, like Gary said, I think I heard 16%, and so that number might scare some people, but I don't think it really, we get fazed by it, and a lot of that is because in the suburbs, the office market is overbuilt. You had so many of these buildings that went up during the .com era that you can't backfill that with enough office. I mean, it was not really a tremendous market per se to begin with, as they say, is downtown, where you had deals happening left and right, technology companies that were being funded almost daily by a new VC. Now, you've got this Class B, and also on the lab side, I think many of these towns, like Gary said, are starting to get it because, I think years ago you might have heard an aversion to life sciences. They might have heard biotech or, and thought, geez, are they going to be testing that on people or what's going on now? I think now they're starting to see these companies that are life science based, and they're looking at them and saying, geez, we want that in our town. We want the next life science cluster to be here.
So now I'm just going to have a very quick surprise rapid fire question for you guys, okay?
Hey.
It'll be fun. So this is I've never done before, so I'm going to do it first time with you guys. So what I'm going to do is I'm going to say one word, and whatever one sentence comes to your mind, Mike or Gary, just say that. Okay? I'm going to start with Mike, okay? You are the... Okay, so office space today.
Sorry, say that again?
Office space today. What comes to your mind?
Office space today. Thinking hold on and be ready for 2021. If you've got vacancy, and if you are, you're trying to think of what you can do. If you can go lab repurpose, you definitely go ahead. If you've got the ability to punch a dock in and have some flex space, go right ahead and do that, because you'll be able to lease it. It's just going to take some time.
Gary, what about lab?
Gold. See, he said one sentence.
I know.
I got it in one word. You got it in 4 sentences.
I'm very long-winded.
So lab is gold. Perfect. I think it's very good. What about manufacturing and R&D, Mike?
Very much in vogue. You're going to see more requirements for that, especially in the medical device side.
Gary, what about office landlord today?
For office landlord,
Yes.
just preserve capital, be prudent, and when the demand is there, just make sure that you can respond and have the ability to do the TIs and get the deal done.
Mike, retail.
Retail. Placemaking was the big word before COVID. I think now you've got, again, similar to the office, you've got to be patient, be prudent, and whatever you can have that is COVID friendly, definitely hang on to it.
Gary, this is the last one for you, multifamily.
Sorry, I didn't catch that one.
Multifamily.
Oh, multifamily. Yeah, don't be scared off. That multifamily's a long-term winner.
Okay. Now, Mike, your last word on the suburban market today.
I'd say right now, it's across the board. It's changing. It's moving more towards lab, more towards life science, more towards research and development. Away from, I think, traditional technology office. I think that was happening before COVID. So expect that to continue.
Gary, your last word on the market today.
Do not get frustrated. Things are going to get better, and we have fantastic fundamentals in the Boston area. So we still remain cautiously optimistic and certainly positive for the future.
Gary and Mike, thank you very much for your time. Really enjoyed chatting with you. Thank you so much.
Thank you for your time.
Thanks, Hibernation.
Sure.